Money, Money, Money Budget Special.
Welcome back here with this budget special, and we are decoding what the Finance Minister's tax proposals mean for your wealth and your wallet. Of course, Gautam, let me come back now to areas beyond equity, because what the budget has done is that it has tweaked the definition of long-term from 3 years to 2 years for unlisted entities. So, I'm wondering what this will mean for a lot of investors and maybe high net worth investors who are investing in, let's say, private equity or who are investing in alternate investment funds, etc. So, what category of funds will this target?
Yeah, just to step back, this period of 3 years was earlier 1 year. In the earlier budget, it was increased to 3 years, which was a negative, and there were a lot of representations made that you've got a disparity between the listed and unlisted, 1 year and 3 years. So the government has pulled the 3 year back to 2 years, and I think it's a positive step. The kind of investors that this would probably impact is, I would think, more in the high net worth category. So this probably offsets a bit of the dividend, additional dividend tax that's going to hit them in their hands. You would typically see players like alternate investment funds investing in this category and getting returns out of exits of unlisted shares, or Indian promoters who may sell their holdings in their private companies and get the benefits from that. So that's the kind of category of investors who would see a benefit out of this.
How do you describe that market right now? I mean, we've seen the pure play equity listed market obviously go through its own motions, but how do you describe this other market of unlisted securities and unlisted companies?
Yeah, so the alternate investment funds is a growing category of capital accumulators, and I think this is one change which will benefit them, because they will be in a position then to offer slightly better post-tax returns to investors. They're doing a great job in terms of funneling capital towards the unlisted sector. The mutual fund does that a great job in the listed space. But you need these kind of players to get capital in and focus in on the unlisted sector, especially since the government's also stated intent and objective is to promote startups and those who are in the if I may say, unorganized space. So I think this all goes well.
And a quick last point on some of the other asset classes. We've heard some announcements with respect to REITs as well in this year's budget. Is it good enough? Will the product finally see the light of the day and get a real impetus?
Yeah, so I mentioned at the start that this budget has seen some bold moves, and I would put the REITs change as being one of the bold moves. It was introduced a year and a half back. One did not see much action. The stumbling block was a high post-tax effective rate of return to the investors, which was probably a low post-tax effective tax rate to the investors. One would expect that with the government making this bold change of exempting dividend from dividend distribution tax, both in the hands of the REITs as well as in the hands of the investors. This should, remove the tax hindrance that was coming in the way of setting this up.
So there's complete clarity now in terms of the transfer of asset to the trust, and then finally the returns that are earned by the individual investors. So there's complete clarity in terms of taxation at both levels.
Absolutely. And the reason the industry was asking for a separate, exemption was because under REITs regulations, they're required to distribute 90% of the income out mandatorily year on year. Right? And therefore, the imposition of the DDT was proving to be a showstopper. So I'm glad, and I must compliment the government for taking a bold move and saying, yes, we want to promote this. We want capital in the infrastructure space and the real estate space, and let's go ahead with this change.
Navneet, that gets me to actually real estate and how you will view this asset class, even from an equity standpoint. I mean, there are lots of listed companies and they've been struggling, and we know the reasons why, primarily access to low-cost capital. How do you rate some of the announcements that came in, either on REITs or, of course, the small tinkering that we've seen in terms of affordable housing? What does the budget mean for housing?
So, of course, we have to see the fine print, but REITs, I think infrastructure investment trust, even the securitization market looks like the pass-through certificates, and probably if there is a tax pass-through and then some of the issues which were hanging around regarding the issuance of PTC can revive some of these sectors. Also, I think the focus on the affordable housing, the higher tax exemption and some of those things will go a long way in reviving the interest in the real estate. One thing we need to remember is that I think the sheer amount of money which is required in this sector, and on the other side the constraints in the banking balance sheet and the real estate balance sheets, we need alternative ways of raising resources for that particular sector, and I'm sure that the government is aware of that, and that's why some of these announcements have been made.
Speaking of strained sectors, does the budget make you feel any more comfortable in terms of stocking up bank holdings in any of your mutual fund portfolios?
So I mean, our portfolios are over the last couple of years have been full of the retail lenders who have done pretty well. Of course, there is a strain in the corporate side of the balance sheet. But I think one can argue about the recapitalization amount of 25,000 crores, but I think we have to look at from a holistic perspective, what is the other package that comes in. If this 25,000 crore is front-loaded with a commitment that the government will provide more if need be after the results are out for March quarter, should be a positive. And also if there is an overall recovery and there are sector-specific, let's say, metals and textiles and some of the sectors which have been under strain, if there are more sector-specific measures that are taken, which can take the pressure out of some of those sectors, will go a long way in improving the stress which is there in the bank's balance sheet.
There was also, I mean, speaking of mutual funds, there was also a small mention, a very tiny mention in one of the annexures, which says the services provided by mutual fund agents or distributors to a mutual fund or asset management company being taxed under forward change with effect of the 1st of April 2016. Is this going to materially alter at all the distribution landscape?
If I'm right, we need to check the fine print, but I think if the distributor is sending less than 10 lakh rupees, if they have the lesser burden of service tax, I think will definitely be very good for the distributor community. But I have to read the fine print.
Okay, fair enough. So we've discussed a lot of different asset classes. I do want to very quickly touch upon gold, because there's a little bit of tax tinkering, Gautam, on the government's own flagship schemes. It was hoping to garner a lot through the gold bond scheme and the gold monetization scheme. There were a lot of critics, and it didn't really take off perhaps in the manner in which it was envisaged. Now there are certain changes in terms of capital gains tax treatment and interest exemptions, etc. Is it pretty much on the lines of what the industry had been hoping for? Do you expect these two schemes to take off in a better way?
Yeah, so both the exemption of the interest on the deposit certificates and the granting of the indexation benefits when you're selling, I think they are giving the necessary required tax benefits that are to be done. Whether investors get into this asset class or not is, I think, a slightly more commercial and investment decision. The tax irritant has probably been taken out of the way.
But I wonder, why would anyone look at this scheme over and above, let's say, in gold ETF? Let's not even talk about the benefits or the merit or demerit of choosing gold as an asset class right now. But Navneet, what do you say? I mean, a gold ETF perhaps would offer you similar advantages, would it not?
Yeah, and with better liquidity as well.
Okay, gentlemen. So coming down to final thoughts then, in terms of what this budget really, leaves us with, what would you say? I mean, if you take a step back and, go over the headlines again, the economy being where it is, the external situation, the global market situation being what it is, I mean, does the budget instill any more confidence in the minds of the individual taxpayer, in the minds of the individual saver? I
think we are putting a very solid foundation on having a long structural macroeconomic stability. This is also paving the way for more monetary policy accommodation. So I'm expecting a rate cut maybe before the next policy. Bond yields have moved down. I think that's another asset class which can do well. And on the equity side, I think still penetration is very small, and all the measures that have been taken to ensure that economy is on a sound path. If the corporate profitability improves, I think still a good amount of money can be made by investing into equities. Structurally, another measure, the tax amnesty scheme, I think once people do that, I mean, once people convert their money, I hope that some of it will go into asset classes like equities.
Tax, I mean, that's a given.
Yeah, so some of that money after that is likely to find its way into asset classes like equity, where structurally they can get good returns.
Okay, Gautam, your thoughts? Does this budget instill any more confidence, I mean, having heard the speech today than perhaps prior to it?
So the number 9 is a bit auspicious as far as Indian culture is concerned. Navratri, the Navagrahas that we have.
Sure.
And I think in 2 parts, he said the whole budget is based on 9 transformational pillars, one of which was tax reforms. When he went into tax reforms, he said we have 9 priority focused areas. So I like the thought process, very clear, saying this is what we want to do. The initial read of the fine print doesn't seem to be throwing out any unpleasant surprises, no significant ones. If that's the case, again, full marks that there's nothing hidden in the fine print which one doesn't like. The other good piece is on a host of other alternate asset classes. We spoke about securitization trusts and REITs, whether it's AIFs, asset reconstruction companies. I think there's a lot of positivity in each of those areas. Yes, the dividend piece, one has to live with the good and the bad, but I would say I'm pretty fine with
the
that.
9 analogy is very interesting. Let's hope the number 9 turns out to be lucky for the Indian economy and for, of course, individual savers and consumption as well. Gentlemen, thank you so much for joining us on the show today.
Thank you.
That's it on this Budget 2016 special. Thank you for being with us.
Money, money, money. Budget special.